Welcome back to my YouTube channel. Today we're going to talk about how Swiss spending and Swiss finances helped me become a better American with spending. So let's get into the video. When I grew up in Switzerland, I grew up in Zurich, Switzerland. That's right here. And that's where I went to preschool, elementary school, high school, college, university. So what I've learned at a young age was handling money. So there's like a carnival type deal where you go shoot, and it was only meant for boys at the time where I grew up. Now I think girls can go too. And you shoot a rifle that you're gonna shoot in the military. It's a SIG, just like this one. And you're gonna shoot that, and you get 6 shots, and you want to get 6 points or 5 points depending on which target is up there. And the benefit of going there is that they're enticing people, young students or young adults, 12 years old, to get a debit card, something like this. It's not a Visa MasterCard, it's called a Maestro card. And that means you can't really go into the negative. And that is pretty good when you're a little kid because you're gonna learn about money. And so you actually enticed to go shoot, and the bank will match whatever amount you shot with real cash in that bank. So you open up an account, and then you take your little slip, however much point you got, and that's how much they're gonna put in your account at the end of the day. So what this does is it will give you financial responsibility at an early age, so you learn how to deal with plastic money. What the parents should do is give you an allowances on your debit card, basically every month or every 2 weeks, whatever felt right to you and your family. And that's how they can go out and make their own financial decisions on top of, when families go out to eat, you're not gonna have to pay for it, obviously, as a 12-year-old. But if you're out with your friends, 13, 14-year-old, and you wanna go buy a bubble gum, a Gatorade, or whatever it is, you have your own money and you have your own finances to basically pay for your so-called fun expenses that you're gonna do. So I learned early on how to deal with a debit card. That's point number 1. Point number 2, that we're diving right into, is about credit. So when I came to the United States, having a credit history was pretty foreign to me because in Switzerland, they don't really require you to have a credit. They don't have credit scores or bank worthiness. They just so if you want a car loan, they'll basically ask you to provide pay stubs and income and expenses to see if you can afford it. It's not basically made out of, have you made your payments on time, whatnot. That did not affect your credit worthiness so much in Switzerland as it is how much are you actually making each month and if you're gonna have a loan for a car or whatnot. Yes, you do need to make your payments on time or they're gonna get repoed or you're gonna have a negative relationship with your bank. But most of the time, there was no problem, going to a car dealer and saying, hey, I'd like to buy this car, what's the monthly payment, and whatnot. So that is point number 2, didn't really get introduced to it. Point number 3, credit worthiness. Here in the US, you can just call your bank up and actually tell them, hey, I'd like to get my credit limit from 4,000 to 8,000 increased. And depending on, how good of a customer you are, how much you've spent and whatnot, they'll basically just turn that on for you because they make money if you don't make the payments. In Switzerland, I tried to do that one time when I was on vacation and I asked them to temporarily increase my credit limit from 4 grand to like 6, 7. And they said, oh, sure, we'll do that for 2 months, but we want to deposit the amount you want over $4,000. So there was no point of me getting a credit limit increase because they just said that we're gonna take 3 grand, put it on hold for you, and then you have a bigger credit limit. But basically it's not really a credit limit. They'll just take some money, freeze it, and that's how much you can go over for it. I don't think that's a great idea. But that's how they're covering their basis, and it's just a different way of thinking. Not that it's wrong, not that it's right. It's way easier for for Americans to just get a high credit limit than it is in Switzerland, because they want to see pay stubs and whatnot and make sure that you're kind of more protected, because having interest rates of 12% is not, I think that's illegal now. There's something for consumer price index, like a consumer protection agency, that makes up how much credit card interest can be. So it's not like here where it can be 28, 29%. In Switzerland, I think it can be like 8 or 9 or 10, 11, the maximum that they allow you to have interest. That was my experience growing up in Switzerland and moving to the United States, how these two worlds collide and now are one. And now I can make some better financial choices because I grew up on the opposite side of credit, where credit wasn't really available and wasn't really meant to be used or whatnot, because everything was like kind of like cash society and whatnot. And now I'm on the other spectrum where, credit buys you anything. That's really good if you're responsible, but it's really comes in really not great when you're gonna try to buy a house and you have, $60,000 in student loans, $100,000 in car debt for you and your wife, and some other unpaid credit card debt. That was a no-go when I grew up in Switzerland, and it wasn't very common for people to have credit cards like that. Maybe now they do. I've been gone for 8, 9 years now. A lot has changed, and I'm not up to date of what my friends and family, how they run their credit. It's not something we talk about in our circle as we do in the US. So culturally wise, completely different. Both of them have their pros and cons. Let me know what country you're from, how you deal with credit, and if you like it, what you do and what not with credit. So let me know in the comment section below.